So today we've got a lot to talk about. There's a lot going on in the stock market behind the scenes, and it's a big week for the stock market, and we'll talk about what's going on. Even though today it looks a little bit quiet out there when you look at the market, there's a lot going on in the background, so we'll go through some of those key things to be looking at this week. First of all, just want to say if you are on the Patreon, I did drop an exclusive video on there a bit earlier, which was the stock request. This is where members on the Discord get to vote for me to look into a stock, and we looked into Nike. Now, I'm not going to lie, I'm sure everyone agrees Nike is a very good quality company, and I think we all would want to own Nike. It's just what value you own it at, and in that video I'll go through where I'd like to potentially own Nike. So if you do want to join the Patreon and support the channel and you get 2 exclusive videos a week, join through the link in the description. It's only £5 a month. But let's get stuck onto what's going on this week. So first of all, just talk about the earnings. The UK really does start to pick up this week. We've got S4 Capital that have already been reported, and we'll actually talk about S4 Capital a little bit later in the video and what's going on with them guys. We've got Ocado, we've got Domino's, we've got Kingfisher, Team 17, which is a company that I'm a little bit interested in. If they can get to a really good value, I might just give them a little bit of a look at. Moonpig, obviously I've sold the shares, but I'll be still checking out their earnings. We've got Trustpilot, we've got Dunelm, we've got Warpaint. That's a really interesting company that I'm watching at the moment. Next, are going to be reporting DFS. JD Sports are going to be reporting. I'll be interested to see if they're getting affected as much as what Foot Locker are at the moment. So there's definitely a lot of earnings out there on the UK side of it. When you look at the US, it's a little bit quieter. A few people might be looking at FedEx and seeing what FedEx is seeing at the moment in the economy as the scene is slowing down. So I think they'll be looking at that on Wednesday. But that probably will be overshadowed because at the moment the market's a little bit more flat. If you look at the market today, it's up 0.2% on the Nasdaq, so a little bit more, 0.3%. The market is quite flat today, and that's because the market is on pause. It's waiting for the Fed to do their announcement. So the Fed, they're going to be doing their announcement on the 19th to 20th of September. They're going to be meeting for the new interest rates. Obviously, we'll get that on Wednesday, and that's what the market's waiting for. It's waiting for the latest where the Fed are going to take us. Now, I'm going to keep this nice and brief because I say the same thing basically for all the Fed meetings. Obviously, the prediction is that they aren't going to increase rates, and I think that's probably true. I think it'll be a massive shock to the market if the Fed suddenly come out and say, actually, we're putting up interest rates now. So I think there's been a little bit of leaked information there where they're trying to get the feel in the market, and they won't shock the market like that. But obviously, we're looking at what the tone's going to be, and knowing what Jerome Powell's tone's going to be, he'll basically say the same thing as he always does. He says, we are leaving room for more hikes, and he will make sure that he doesn't get backed into a corner where he is forced not to increase rates. You know, he will say that if we need to, we will carry on doing it, and inflation still needs to come down. That's what he will say, and the market won't really get that excited. You know, the market will be hanging on to every single word that he's saying, and they go, oh, he said this word, and he said this word so many times, but realistically, you know, he'll just leave himself more room for more hikes. And I think personally, for me, he will carry on hiking up interest rates. I don't think he should do. I think I thought for the last 2 meetings now he shouldn't hike up interest rates, but my thoughts are that if he doesn't hike up this time, I would expect him to hike up in October and November, and I don't think he should do, because you look at inflation is coming down, and the main thing that is causing inflation to stay up at the moment is the lagging indicator of shelter. I've covered this all on the YouTube channel before, so I'll keep it nice and brief. I don't think he should do it, but I think he will. So I think that it's the most predictable meeting that we'll see. And then the market will decide if it wants to get excited because it thinks that, oh, he's a little bit, hawkish, or he's a little bit more dovish. He said this word, so it might mean he might not do interest rates, or he said this word so many times, so it's actually hawkish on it. I think that's ultimately where we'll be for it. And I guess that kind of leads us today on the next stock that I want to spend a few minutes on, which is S4 Capital. S4 Capital today, a stock that I own, took a little bit of a battering today. It was a little bit choppy through the day, actually. The really surprising thing is when it opened up in the green. I think it was actually up 1%. And then within the first kind of 15 minutes, it then started dropping 20+%. We did start to see a little bit of a couple of buyers start coming in towards the end of the day. But it took a big beating today down. And the effects of the economy starting to slow down, and the fears of the recession were clear today in S4 Capital's earnings. S4 Capital is a marketing company, and without doubt, it was the first kind of, once again, the signs that are showing that the economy is weakening. It shows that companies are being nervous. They're nervous to spend money. They're nervous to spend on marketing, and they're preparing for a recession. And it was clear on S4 Capital's earnings today that's what's going on. And this is my whole point that I've kind of said on the YouTube channel for the last 1 or 2 months now, is that This is the most nervous I've been on the stock market and the economy. I'm seeing these interest rates get hiked up when they shouldn't be, and if you keep pushing those interest rates up, you're starting to, there'll be, the economy's held up very well for the last kind of year and a half, but there'll be a tilting point where it can't do it anymore, and the economy will start showing start showing some cracks, and it's clear that that's starting to happen. You start to see the economy starting to slow down. You're starting to see job growth coming in weaker. You look at the marketing company now. Companies are not spending on marketing because they're getting a little bit cautious, and eventually, even if you don't cause a recession, the fear of the recession will cause a recession, and that's clear that's starting to happen. So unfortunately for S4 Capital, they're just a company that we've seen in the last few months. We've seen weakness in marketing, and it's clear that the weakness in marketing has got worse, and companies are getting more nervous once again for spending money. And it's a little bit unfortunate because I look at S4 Capital and I think like there's not much they can do. If companies are getting nervous around a recession, they are going to get hit by it, and that's what's going on. I looked at the earnings. Obviously they came out with a bit of a profit warning. They said, look, we are going to be a little bit lower on our revenue guidance that we said. But I've got to say, the frustrating thing I had with S4 Capital is that they did a profit warning a couple of months ago and then did another one today. Obviously, maybe the fact is that they've seen it get, they didn't expect it to get that worse that quickly in the last kind of couple of months, and it has done. So that might be a point of view, but to do a back-to-back is a little bit frustrating to see. But if there's a slowdown out there, they can't really help it. And I did look at the company, and I thought today, I said on the Discord actually that I do expect S4 Capital to probably drop 10% on a profit warning, just because it's a profit warning. But to see actually how much at one point it was actually down nearly 30%, I was like, that's a little bit ridiculous now. It's not like we've seen S4 Capital majorly downgrade the guidance. Like it's only moved down slightly. It's not end of the world stuff. Look at the company. The company is still up 5% on a like-for-like basis even in this time frame. You look at the losses, they're not really burning through the money. They're going to make the cuts to try and get through this time frame, but you think when the marketing does come back, when these recession fears do go out, the company should go back to good growth, and then that growth comes back and they start driving up that profitability and revenue. I was like, it's getting that's a little bit silly for a company that's going to be putting in, nearly $1 billion in revenue, and potentially, the longer term of 20% EBITDA margins on that. You start talking, 2-3 times EBITDA. You're talking, the free cash flow as well. Once free cash flow comes back, it's going to be relatively really low. I was like, for me, I didn't want to buy it because for me, I'm concerned this could potentially get worse. And like I said, for me, I'm building up a cash pile because I'm worried about the economy at the moment, and that's what stopped me from buying today. But I looked at it and I thought I was tempted, because I was like, we understand it's not an S4 Capital situation why the stock is this low. We know it's because of the Fed that have increased interest rates, and that it's taken a knock-on effect on the companies now, and they're not spending on marketing. I was like, it's not really S4 Capital's fault. They're managing the numbers haven't deteriorated that much to justify it. I was like, bit silly here from the market, and there was part of me thinking it's getting a little bit of a low valuation here, even though it was disappointing numbers. So I didn't buy. I thought the move was a little bit ridiculous, and I look at the similar companies. For example, I was looking at Future, and they were getting hurt another 7% because of S4 Capital today, and they've not brought out a update since I think May time. But I mean, just look at the trend. Just look at the trend. They're very similar kind of companies here. And I mean, just look at the stock charts. They're basically, moving in line with each other at the moment. And obviously Future haven't reported since May, but I would expect that when they come out with a trading update, they'll say something similar like, we're seeing deterioration, and it will just kind of sum up the kind of industry that we're in at the moment. And if you look at their last earnings that they actually did do, which were the interim results in May, so it was May time. You look at them. They saw their operating profit was actually down 3% year over year. You look at the revenue. Their revenue was basically flat year over year. So this was May time. So I'm sure they're going to basically come out with the same thing, saying, "Oh yeah, we've seen it get. The economy is getting worse out there," and they're going to come out and say that they're probably going to downgrade their profit forecast, and they'll probably downgrade the revenue forecast. So it's not an S4 Capital thing at the moment. It's just a whole industry kind of thing at the moment. But the thing is for me, I look at it going, could it potentially get worse? That's why I didn't really buy the dip today, even though I was so tempted, because I looked at it thinking this sell-off's a little bit low. Like the valuation now for the company that's putting in nearly $1 billion in revenue, and when they get out of this recession fear environment, this probably will look a very, very cheap stock. But it's one of those that, unfortunately for me, you know, at the moment, my opinion on the market is that I'm a little bit bearish compared to what I'm normally at. You know, I'm worried. I'm worried on the Fed. I'm worried the Fed are putting the interest rates up too much, and it's going to, you know, crack the economy. And I think we're seeing the cracks. We're seeing the cracks in the job data. We're seeing the cracks in the growth. We're seeing companies now pull back the spending. We're starting to see that, you know, in marketing companies' earnings. And as much as this wasn't really S4 Capital's fault, it's a whole industry situation that's going on here. I just, you know, I don't know if I want to buy it at the moment. You know, my priority is that if I think the Fed are going to carry on increasing interest rates, which they look like they are going to be doing, and we'll have maybe a little bit better idea on Wednesday, you know, eventually this is going to cause a lot of pain in the economy. And for me, my main priority is building that cash pile up, and I want to get to at least a 10% cash pile, because I think we could see some opportunities. And you know, if the economy does, you know, continue to get worse, then unfortunately, you know, S4 Capital aren't going to see what they said here is that they're going to see, you know, you know, heavy weighted to the Q4. They won't see the rebound in Q4. Unfortunately, it'll get worse, and from that point of view, will we see then S4 Capital? You know, we've seen the market be ridiculous and sell it off 20+% today, which I think is not needed. I think, you know, fair enough, it was a profit warning. Maybe the stock goes down a bit on a profit warning, but when you consider how much it's already been hurt and the valuation it's at, you know, I think it's ridiculous. And maybe the market's ridiculous once again, and if there is a weaker Q4, it pushes it down even lower, and you might get a chance to get it even cheaper. You know, I'm not saying that I, you know, I time the market, but for me, you know, that's my overall thoughts at the moment. So yeah, I think a bit ridiculous on the sell-off on S4 Capital today, and I did kind of want to buy today, but I was just thinking, you know, in my opinion, I think things could get worse out there, so I might as well just hold the cash at the moment and make the priority building the cash pile up at the moment. So yeah, we'll keep an eye on those UK earnings. Obviously, we'll see what the Fed does, and obviously, I think that unfortunately they're putting more pressure on the economy, and it was clearing like an earnings from S4 Capital today, and I think the cracks in the economy are starting to show at the moment. Anyway, so I hope you enjoyed this little video, and things to look out for this week, guys. Sorry it was short, but I've got to make sure I get it up for you guys. So if you could hit the like button, and if you're not here, subscribe, and I'll catch you in a bit.